Hello everyone, here's a quick macro and market update for the month. Indian equities extended the recovery in November with the Nifty 50 hitting a fresh all-time high for the first time since September 2024. The rally was supported by improving corporate earnings, robust domestic demand, resilient IPO activity, healthy DII flows, and easing inflation, all of which helped cushion the downside risk. However, a weaker rupee and mixed global cues limited the upside momentum. During the month, large caps and mid caps outperformed the small caps. Meanwhile, the Indian rupee continued to depreciate, falling about 4.5% year to date against the US dollar. Besides the lack of RBI intervention, factors like widening current account deficit, a stronger US dollar, and FII equity outflows, all these factors have put pressure on the rupee. India's GDP grew 8.2% year-on-year in the September quarter, signaling stable demand, firm services activity, and consistent public capex spending. Rural consumption remains resilient, and urban consumption is gaining traction, supported by recent GST rate rationalization. In the December policy review meet, the RBI cut repo rate by 25 basis points to 5.25% from 5.5% earlier, and it decided to continue to maintain a neutral stance. On the positive side, the RBI has now raised FY26 GDP growth estimates to 7.3% from 6.8% earlier. Moreover, the RBI has reduced FY26 CPI inflation targets to 2% from 2.6% earlier. Foreign institutional investors turned marginal net sellers in November with $0.1 billion of outflow from $1.3 billion of inflow seen in October 2025. Looking ahead, the strong GDP print underscores the impact of supportive government policies, robust capex spending, and sustained momentum in the services sector, all pointing to resilient domestic setup. That said, while there is growing comfort around global macro conditions, policy shifts and geopolitical risks continue to be the important factors to monitor. In the near term, some of the key risks are further rupee depreciation, spike in crude oil prices, delay in India-US trade deal, and movement of capital flows by both FIIs and DIIs. That's all for this month's market update. Thank you for watching, and as always, we'll keep you updated with the latest market developments.